The corporate on our radar right now is TTK Prestige. CLSA has put out their mid-cap strategy note, of which TTK has been one of the top picks. They've upped their target price on the stock from about 7,725 to roughly 9,000. To discuss this and more, we have Mr. T.T. Jagannathan, chairman of the company, joining us on the phone line. Thanks a lot, sir, for joining in. Good morning. If you could tell us how the demand trends have been. There's a lot of impetus on rural income growth, perhaps some sort of farm loan waivers, appeasing the rural market. So ahead of elections and this year, how have the demand trends been?
The demand trends have been good. We've talked about 16% up to now, and virtually every month we've grown about 15-16%. So it's been good, yeah. And the rural demand particularly has been very good.
Oh, that's interesting to know then, sir. So 15% is the growth for the first 9 months is what you're telling us.
Yes.
Okay. Let's go further down into it. The Ujjwala scheme, that was, that's a potential game changer, or that's potential
That is a game changer. It has changed the game.
It has changed the game. So
yes.
Are you seeing it on the ground? Do you expect things to increase from here as well? And also I'm looking at a CLSA brokerage note. They are talking about post the implementation of GST, your market share is likely to increase. Has that happened?
Yes, that has happened, but not to the extent that we expected.
Okay. And this
I believe it will take a little time. I believe it will take a couple of years for it to fully go through.
All right. Mr. Jagannathan, you know, the big imponderable for next year has been elections, and usually we keep talking about, candidates, contestants wooing the markets with, say, cookers, etc., and home appliances. Ahead of elections, typically, what sort of growth do you see, or do you see any spurt in growth?
No, we've last 30 years I've tracked elections in our sale. There's no connection at all.
Okay.
All right. And how is your market share in the cooker business panning out as against Butterfly as well as Hawkins?
It has grown by about 2% from last year.
All right.
And if you could give us the market share, sir, with your competition also in mind?
In the we don't have the unorganized sector numbers because it's unorganized.
Okay. Unorganized, sir? Unorganized as a percentage of the total market, how much is it?
Even that's a guess.
Very rough estimate. Yeah, go ahead.
About 35%, 1/3.
35%, okay.
Yeah.
So talking about the remainder 65%, what is your market share and how are competitors placed?
65, we are 30, okay. And the competitors put together are about 35.
All right. So close to around 45-50% of the organized market is what you are.
Yes.
All right.
Yes.
So you're telling us that demand has been fairly good. There's a growth of around 15% odd. At the half-year mark as well, you had done roughly around, 12 to 13% growth. So that's pretty good news. What about commodity prices? They have cooled down a tad bit. Is that going to be a tailwind for your margins going ahead?
It is a good thing and a bad thing. What happens is when commodity prices drop, the unorganized sector immediately drops prices.
Oh, okay.
So there is a part good because it adds to the bottom line.
Okay.
So your margins that you posted of close to around 15.5%, 15 to 16% range, is that where you will sustain going forward, or is there any scope for improvement?
I believe that will happen for these 2 quarters of the remaining 2 quarters of the year.
All right.
Let's talk about the exports as well as a percentage of your total sales. Brokerages on the street, they believe that it could go to around 10% as well in the time to come. Though it's a smaller part of the business, it's growing at a very, very fast clip. Your take on that?
Yes, it is. Yes, it is. There are several reasons for that. One is that we've now built capacities and are able to cater to export, which we were not able to before. 2 is the China-US war word, so that's helping us. A lot of US companies are now moving to India. And 3 is the new GST regime makes it very friendly for export.
Oh. All right, fair point there. Mr. Jagannathan, quickly before you let you go, you were eyeing inorganic opportunities. You have cash of 240-50 crore plus on your books. For the last 2-3 quarters, you said that there are talks. What is the update on those talks?
There are talks.
All right.
Could we hear something, sir, before the end of this fiscal?
I have no clue. These stocks take time. It's like a marriage.
Okay, so we'll wait by for that marriage. Then, as of now, what you're telling us, I don't think the engagement has as of now has taken place, or has the engagement?
That is correct. That is correct.
Is the engagement, or you're still talking to potential suitors, sir?
The potential suitors.
Okay. Quickly, your capacity, organic capacity is likely to go up, right? By how much, and by when do we see?
By 31st March, we will have almost double our capacity.
Double your capacity by 31st March 2019?
Yes.
Okay. All right. Pleasure talking to you as always, sir. Thanks so much for joining in. Encouraging to know that, in fact, demand on the ground, as per what sir tells us, is growing by nearly around 15%, and a bit of a tailwind in terms of margins as well. They can hold it at around that 15 to 16% odd. Well, the rupee has shown some weakness, as we earlier pointed out. The intraday chart should come up for you, and keep an eye out on a couple of these frontliners. TCS comes out with its set of numbers, but that stock has virtually moved to the high point of the day. I'm looking at the broader markets as well, and a couple of these pharma names, likes of Torrent Pharma as well as Glenmark Pharma, both of them are moving higher. So maybe it makes sense to get the pharma index itself out for you. That as well, I think, could be moving higher, because quite a few of these pharma stocks are doing pretty well.
Absolutely, and a couple of these mid-caps doing fairly well as well, but I believe we're out of time on this edition of Chartbusters. But before we wrap up, dear viewers, with the new rules coming in for DTH and cable coming into effect from February 1, you have to choose the channels you wish to watch by January 31st. To keep watching India's #1 English business news channel, CNBC-TV18, call your cable or DTH operator and ask for the Colors Family Pack, which includes 24 channels available for ₹35 per month, or subscribe to CNBC-TV18 for ₹4 per month. To keep watching the leader in global market and business news, CNBC-TV18 Prime HD, call your DTH operator or cable operator and ask for the Colors Family HD Pack, which includes 25 channels available for ₹50 per month, or subscribe to CNBC-TV18 Prime HD for ₹1 per month.